All right. Hello, everyone, and welcome to the latest edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and community members kind of gather around and discuss the recent market events in the crypto markets. But we do this from a more of a fundamental data and perspective. We share some interesting market insights that we have discovered over the last week using Sentiment's metrics and indicators. So, if you have never used Sentiment before, I suggest checking out sentiment.net. The link is in the description of this video. What we do is we develop custom tools, metrics, and indicators based on-chain social media and development information. So we do this to kind of help you better understand the crypto market and gain a broader context of what's going on in the crypto market and the behavior of its many participants and stakeholders. So as I said, if you like anything that you hear today during the call, check out sentiment.net. The link is in the description of this video. And also join our Discord because we talk about this stuff pretty much every day in our trading channels. So if you don't want to wait until next week to kind of hear what we have to say, the easiest way to join the discussion is just joining the link in the description of this video to our Discord channel. So without any further ado, I'm gonna give it up to Brian to kick us off with today's topics. I think there's an overlay, so on this call you'll be able to see what we're discussing currently and what's going to be the next point of discussion. So Brian, you've got the floor whenever you're ready.
Alrighty, thanks Dino. Hello everyone. So what we're looking at right now is our 90-day percent change price return model based on the top 100 market cap projects out there. What this essentially is good for is directly being able to compare how the top 100 projects are doing compared to each other, and then see trends like what we're seeing now, where we have a lot of the lower half, the bottom 50 of the top 100, sort of exceeding the price of the top 50 on average. You can also look at things like the average line, which is 5.72% over the past 90 days, whereas the median, -13. So when you take away all the noise, you can see a big difference between the average and median right now. So what we're basically seeing, just as I said, we have some standout coins like Unibright, Insular, Numeraire, Hyperion, which I discussed a little last week, that are kind of having just massive gains ever since Black Thursday happened. Everything was flushed down, and then they've sort of bounced and then exceeded the prices they were at before Black Thursday. Whereas the only one you're really seeing that on for the top 50 is Hedera Hashgraph, and maybe a few standouts like OKB, Tezos has been doing well, and of course Chainlink, as many of you follow. And then we can look at something like the 7-day chart here and see just how massive of a week we just had. Pretty much every coin, with the exception of about 7 or 8 of them, had positive return weeks, had a positive return week. And then once again, we saw that the lower half of those top 100 coins tended to perform a little bit better. The average was about 5.5%, the median about 3%. Either way, this is an exceptionally good week, and one we don't typically see outside of late 2017 and some pretty massive bull runs on a consistent basis. So from a direct swing trade perspective, this could be a temporary toppy sort of situation when you see all green like this, but this is why we have other metrics, and we'll dive into those in a second to sort of complement what we're seeing on the returns here. And then we also, of course, have the 24-hour graph, which is used for very short-term trades. You look at an outlier here like Digibyte, which has given away about almost 14% just in the last day. You can use this kind of chart for a very quick type of trading strategy where you want to play a bounce and hope that a coin like Digibyte sort of normalizes to the rest of the pack over the next few days, and then maybe sell it off again. Of course, this isn't investment advice. It's just the type of thing that you could do for both bottoms and tops when they're sort of outliers compared to the rest of the markets. Okay, I'm going to move on because we have a lot of topics to discuss today. Our next one is about the signal predictions that we're now putting out on a weekly basis. I basically dive into anywhere between 5 and 7 metrics for about 4 different coins. They will always include Bitcoin and Ethereum, and then we'll have a few other projects to go along with them to complement them based on what's been trending in the news over the past week. So I won't go over this whole article. That would take far too long. But what I will say is what you'll typically see in these articles are a rating system that's comprised of the average ratings that are based on things like price, daily active address versus price divergence model, which we've gone over on this call before, the NVT model, which we've also gone over, MVRV, which Valentin often comes on and talks about, token age consumed, maximal mean age, social volume. And then what I do is I give a rating based on exactly how those metrics are looking over the past few days, usually about 3 days. I look, toward the past 72 hours and how it's comparing to the longer term, viewpoint for each respective metric. And then I blend them all together, take all these 3.5s, 3.0s, etc., and I give an average rating. And then based on where it lands between 1 and 5, it'll have a predicted grade. I may actually simplify it, just get rid of the grade altogether so it's not confusing or seems contradictory in some way. But basically know that it's a 1 to 5 scale, and I base it on some of our best leading indicators. Now, if you do have an indicator or a metric that you'd like me to sort of dive in on one week, I am happy to do this, assuming that it's a indicative enough metric that would be topical to this kind of discussion. But I want you guys to know that these articles are going to be coming out every week, and they're available to Sandbase Pro members. And I hope you guys get a lot out of them. And we have a survey that we always put up where you can get an instant 10% off simply by answering 2 or 3 questions about what you thought about it. How would you rank it? Do you think it was helpful? That kind of thing. So yeah, really excited about this, and you'll have another one coming out Tuesday morning.
So Brian, this was the first time that you published this sort of ratings was, I think, 4 days ago or something, right? So based on the on-chain and social metrics of the coins that you analyzed 4 days ago, what was the situation like? Was there anything outstanding that was maybe indicative of this move upwards, or was it mostly like neutral waters for
Yeah,
Bitcoin and Ethereum?
that's a really good question. So based on what I saw, everything looked pretty neutral. In fact, Ethereum was actually ranked the lowest. And we believe in accountability here at Santiment. We had an average rating below the 3.0 metric, showing that it was actually looking like it was more likely to pull back very, very slightly than it was to have this kind of increase that it's continued to have over the last 4 or 5 days. So when I do all this research coming up on Sunday and Monday, so I can keep the metrics as fresh as possible, I'll be looking to see if these trends that I talked about on last Sunday and Monday were, are still apparent with what's happening in the markets. As far as something like Chainlink, this was actually the most bearish of the 4 projects that I talked about. And obviously, because it's connected to Bitcoin, it's still moving up. But the prediction is technically coming to fruition on this one because Link has sort of dropped back a little bit as far as it's pegged to Bitcoin, and most other altcoins are kind of gaining on the lead that Link had on its direct comparison to Bitcoin's price. So we are seeing some truth to this, but when you compare, you put 6 or 7 different metrics in a blender, there can be an awful lot of noise. And what I'm going to be experimenting with as I write these articles on a weekly basis is which ones are really telling the best stories on a consistent basis, so that I can optimize them and eventually say, all right, these 3, 4, or 5 metrics are the ones we're going to focus on most and give us the most true average rating here, which for Link was a D plus 2.5. So this was telling us that because of the amount of price that Link gained, and the maximal mean age sort of rising higher, there's also something about the MVRV. Yeah, their MVRV is way above water right now. There were a lot of signs showing that Link can and should eventually pull back a little bit compared to Bitcoin. Now, if Bitcoin keeps exploding and Ethereum keeps exploding, then we may see more of a lateral move for something like this. But all in all, this article was kind of a neutral report. We saw mostly even ratings based on all our metrics to slightly bearish, but not to an extreme degree.
Okay, and that makes sense. I think a move like this from Bitcoin is going to pretty much mud the waters for all other coins. So it's mostly, and I don't think it's that surprising that Bitcoin's overall rating was sort of neutral. I don't think there was anything out of the ordinary in terms of Bitcoin's own on-chain metrics that were preceding this move. There were some other interesting on-chain behavior from the stablecoin holders, which might have actually gave clues as to this pump that was ongoing in the last couple of days. But we'll go over that in a little bit.
Yeah, good point. And that's something I'll probably try to add on to these reports as the weeks go by. I'd like to see how stablecoin correlations are impacting the prices and what they're foreshadowing. So yeah, hopefully we get another fairly accurate report, and I'll continue to try to keep everyone on, keep these reports as honest as possible, and go back to the prior week and talk about what kind of results we saw based on the metrics that we discussed the week before. All right, moving on, I'm going to go really briefly into our top holders model here. And specifically what I'm highlighting right now is the top 10 holders project. We have 15 listed here. They're all ERC20s because this is these are the projects that we actually have these types of holder metrics on. And this dark blue line here is Ethereum, and the rest are other lower market cap ERC20s. And you'll notice that they've mostly been neutral. And over the past 30 days, actually, the majority of them are under 0%, indicating that top 10 holders for those projects have taken a slight profit in those respective total supplies. However, the exception is Ethereum, which has actually seen a gain of these top 10 wallets of almost 1.5%, which is massive when you talk about the actual market cap of Ethereum and how much money that actually is. It looks to be the biggest project of interest for top holders, and I wouldn't be surprised if some of the same top holders that are selling off in these other ones are actually buying into Ethereum and causing this kind of separation that we're seeing right now. So super interesting, and we also have it illustrated on our total graphs here. So what this shows is basically the same graph that we were looking at before, but from the perspective of what the total percentage is held by those top 10 holders. So this is the same top 10 holders that we're looking at, but it's showing from a weekly trend how much they are rising. Now, obviously, Ethereum, because it's such a popular coin, it's the second market cap ranking, there are more holders overall in Ethereum than there are in these other projects, which is why you see that the top 10 holders only hold 15% versus something like Fetch, which is almost at 90%, right? But most notably, what you want to look for are these trends upward, where 3 weeks ago, the top 10 holders were only holding 14.4%. Now they're up at about 15.3%. And that's a very large increase when you talk about just how much real life money that actually is that's going into these top 10 wallets. So a good sign for Ethereum.
Right.
Obviously,
Sorry, one sec. Do you have in this template the sort of a breakdown between the non-exchange and exchange holders within the top 10 or top 100?
I do. Yeah,
Yeah,
I
that would
don't
be.
know how much we can gauge from this right now. I didn't really prep,
Mm-hmm.
a focused illustration on this, but we do have. Let me see if I can highlight Ethereum really
Yeah.
quick. I'm gonna quickly just open this up, and I'm going to go to Ethereum, make the line super thick, It's kind of tough to see because of the amount of noise in the graph.
Yeah, but you see a
But this,
small sort of bump there, right? And this is the top 10 holders of Ethereum, but those not belonging to exchanges, right? Or the addresses
mhm,
not belonging to exchanges.
exactly.
Hmm.
And then we have the off exchange. Let's see if I can do the same thing there. If I can pinpoint Ethereum, it might be a little tricky. Maybe we could find it on Oh, here we go. Let me see if I can snag that really quick. Yeah, it's mostly flat, but maybe we can see it on Sandbase really quick. Let me pull that up.
Yeah, because I'm interested in seeing. So this move is quite notable. So I'm interested in seeing exactly what sort of group of Ethereum whales have contributed to this. Whether this is people moving Ethereum to exchanges, or if it's people actually maybe already purchasing Ethereum on exchanges and then withdrawing it to their own personal wallets. I think the direction of the move can also be very interesting in figuring out um, the short-term potential for Ethereum as well.
Hmm. Yeah, yeah. What we're seeing right now is that the non-exchange top holders seem to have had over the past 10 days. They've kept their amount a little bit higher than
Yeah.
those that are off, if I'm understanding this correctly.
So what I'm seeing is that when does this spike begin? It's somewhere around 20th of April that the brown line kind of starts vaulting upwards there. So
Right.
that's yeah, 20
19.
19th. Okay. So we can see that from the 19th to 22nd, so in that just 2 day, 3 day span, there's been quite an influx of Ethereum to the biggest exchange wallets. And then at the same time, we saw a small offloading by Ethereum's biggest non exchange holders, all of which pointing to maybe some increased sell pressure for Ethereum specifically before this Bitcoin rally. And you can also kind of correlate that with the Ethereum's price action at the time. So if you look at April 19th, or what is it? Um, right there, yeah. So you can see that as the amount of Ethereum on exchanges started growing, the price action of Ethereum started going downwards, which is something that we see quite often when there's a large inflow of a specific coin to exchange wallets. That usually indicates a rising sell pressure and can sometimes result in a short-term correction. So what we're seeing on the chart seems to make a lot of sense.
Yeah, that's a great point. Really interesting stuff here. Cool. All right, moving on to the last topic I'm going to discuss. Twitter, and to an extent, some of the other platforms as well, are showing close to year-long highs in positive sentiment right now, which is super interesting. And the reason we're highlighting Twitter here is because the spike has been pretty massive over just the last, it looks like, I would say 10 days or so is when it started to get very positive and people realize, okay, this bottom here seems to have been a big trap. And now we must be going back to, that 9K level that we were at before the big drop related to the pandemic happening right now. So everyone is thinking until we get there, we must probably be pretty bullish. And if you go back historically, it's been kind of a mixed bag. You can see that we go back to mid 2018 when people were still fresh off of the end of that epic bull run we had in late 2017, and thought we were seeing that big rebound here when prices started to bounce again. And then they all got fooled, and it dropped back down again. And then we had our biggest positive sentiment spike here in May of last year, just about a year ago, about 11 months ago. And that turned out to be a very accurate prediction by the crowd because it was just the beginning of the price climb that actually peaked up to around 12.5. I think it actually got a little higher than this, but it's averaging days, so it's not going to show the true peak. But over time, what we've seen is that when positive sentiment gets this high, it tends to either be a massive fake out or a self-fulfilling prophecy of prices actually starting to take off.
Yeah.
But either way, I think it's fair to say that based on history, we can probably see a big break one way or another coming up as we start to peak toward the levels we saw in May.
Yeah.
Yeah, I wouldn't be surprised.
Honestly, if you look at the 1 year sort of sentiment analysis for Bitcoin here, so basically for everyone listening and not really understanding what this metric shows, so we at Santiment have this custom data set of over 1,000 different social media channels that we're listening to. So this includes, Telegram groups, crypto subreddits, Discord channels, pretty much anywhere and everywhere that there's a discussion around cryptocurrencies going on. So we compile all of this data and we feed it through a sentiment algorithm that we've developed in-house. And what you're seeing at the moment is the difference between the amount of positive and negative messages relating to Bitcoin on Twitter over the last, what is that, like year and a half. So if you look at the last year in particular, these types of levels of sentiment on Twitter have almost always correlated to like short-term trend shifts in price. So the biggest level of sentiment since this one was around what, May 2019, and it accurately predicted the local top. The fact remains that after the sort of local top there and small sort of retraction, there was an even higher run. But every time since then, when we saw this spike in Bitcoin related sentiment, it was either a very, very much at the top, or it was a fake out to a higher high. So will be very interesting to keep an eye on this particular metric over the next couple of days. Because yeah, these types of extremely high levels of social sentiment always indicate a heightened volatility. So it could go one way or another, as you can see, but either way, it seems like we're in for a ride over the next couple of weeks.
Yeah, and it's worth noting, lastly, that you can actually see mentions of various projects on our SAN data by going to the social data feed section, and you can just open up Twitter or Telegram or any other platform that we cover and see what the most recent comments are, or you can see them by most negative, most positive, etc., according to our algorithm. So really cool stuff here. And yeah, that's all from me.
Okay, thanks a lot, Brian. Before I give it up to Kelvin, I just wanted to um, spend a few more minutes on our social data. By the way, I can hear some echo on my and maybe it's from you, Brian. Yeah, good. So let me just quickly present my screen and show you guys a few interesting tidbits that I found by looking at our emerging trends tool today. So basically, here, using that same social data set that I mentioned just a minute ago, you can essentially enter any word or phrase, and you'll get in return the amount of mentions of that word or phrase on crypto specific social media over a set period of time. So I was interested in 8K in particular, given this latest bump by Bitcoin. And sure enough, if you can see it here, that you see the blue is the amount of mentions of 8K on crypto social media over the last 3 months, and then the green line is the price of Bitcoin. So right here we see the 1 month high in the number of 8K mentions on crypto social media. So it seems like this correlates very, pretty much on point with what we've seen on Twitter's sentiment charts. That a lot of people seem very, very confident in Bitcoin breaking above 8K over the next couple of days. And similarly, if we take a look at a few just basic bullish keywords like buy or bought, we can also see a growing number of these types of keywords on crypto specific social media channels as well. So over almost 4,000 different mentions of buy or bought on crypto social media right here on April 23rd, so yesterday. So it seems like, the crowd is very much on the hype train at the moment as far as Bitcoin's price action is concerned. Now, you know, that the crowd has had a checkered track record in the past. Sometimes it's been fairly on point, but other times, it pays to go against the grain and, maybe bet against their own predictions. So you can check this out on app.santiment.net. Just go to labs and emerging trends, and you'll be able to, play around with this tool. Any sort of word that comes to mind that you might want to, see what the crypto community thinks about it and how popular it is at the moment, you can do so here. So now we have a short. So if you actually look at the emerging trends here of ours for today, we have this list of words that are gaining the most social volume on crypto social media in the last couple of hours. And XLM seems to be the crowd favorite at the moment. There seems to be a lot of talk about Stellar over the last couple of hours here. So, Kelvin, I know that you've been looking at XLM today a bit more in depth. So, if you want to share a screen and kind of give us your thoughts about why XLM seems to be very popular with the crypto crowd at the moment, I'll stop presenting and let you take over.
Hey there, guys. Just trying to see whether the screen is being presented.
Looks good.
All good? All right. So, yes, today we have XLM at the emerging trends. Being number one, but being number one isn't exactly the best thing or a good thing in this specific emerging trends leaderboard, mainly because anything that appears up on top tends to be called as the local top. So anyone seeing this and has XLM should take note on this. And let's take a quick look at why is it on top right now. So over here, we have switched to the social volume to take a quick look at why is it on the emerging trends. So you can see over the past few days since the run-up that started this week, we have seen a huge increase and spike in social volume. Generally, this is a very, very a worrisome sign. As you can see over here, we have, I think, 133 mentions of the social volume. And the last time around, we've seen somewhere around this figure was around 116 near the peak itself, which then XLM actually fell really bad. The last time around, we also seen something as huge as that would be this over here. And after that, it fell a little bit before rising again. So over here, usually it means a local top might be in, and one should look out for that. So to look at things as well, the crowd is really getting more and more excited already. And you can see here with the first rise, there's quite a huge increase of chatter, but after a while it dials down a little bit. But the second leg up is where the crowd is getting much more confident, and hence the huge spikes that we're seeing. And I'm not surprised that there are people calling for like, I don't know, maybe $1 XLM and insane figures at this point in time. So let's take a quick look also using our sentiment to see what's the sentiment looking like. As Dino mentioned earlier, this is a good way to really look at how the sentiment is. You can see right now, there's a spike and growing interest, positive sentiment around Stellar. So that's, like I said, increased confidence in Stellar by the crowd itself. And given the amount of social mentions, once again, it's a red flag for a local top. The last time around this happened as well. It was during, I think, sometime earlier this year before it fell to the negative area here, which is, I think, this is the period of like Black Thursday and pretty much mid of March meltdown. So yeah, that's that. And the next thing is, if we want to talk about Stellar, we cannot talk about it without mentioning XRP. It's a father, if you will. So interesting note on Stellar and XRP, we are seeing some divergence. Usually when Stellar tends to pump, it's because XRP went ahead first, and it tends to follow the price closely, as you can see over here, for most of the days. But recently, I think sometime at the start of this month, it has taken its own path and actually outperformed XRP by an interesting amount. I think taking just the start of the week, we would see, I think, let me see, what have I written down? Oh yeah, since the start of the week, XLM have seen a 24% gain as compared to XRP's measly 6% gain. I suspect it has something to do with the huge supply that XRP has to offload, but didn't really dig much into that for now, since the topic is on Stellar. Another interesting thing is that the Stellar guys have been heavy in their development activity, the purple one being their development activity, and I'm comparing it against XRP's development activity. Overall, in general, even with their drop, they are still outperforming XRP by a whole bunch load. And yeah, XRP just seems quite choppy and not really doing much, I guess. So it's pretty interesting that these guys are putting in a huge amount of effort in what they are doing, and whoever's in it, just be careful. Yeah, that's
Kelvin.
all for. Yes.
Yeah. So, is there any news related to XLM at the moment, or is the crowd mostly just, is the project gaining social volume basically because of the pump, or is there actually some news behind the increased chatter about Stellar?
I did check their Twitter, but doesn't seem like there's any significant news out there. There was some mentions of some core proposal thingy, but based on like the Twitter feeds itself, it's mainly because of the price action that we are watching. Yeah.
Yeah. So can you just quickly go back to the social volume for XLM, because it's quite an interesting image. So this is what, the last 3 months or so?
This is since the start of the year.
Oh, okay, since the start of the year. So you can basically see here that pretty much the last two extreme spikes in social volume came maybe a day or two before the very top, right? So the first one right around, what is that, like maybe 15th of January, 17th of January. Um, Before that, yeah, 18th, 17th, yeah. So it basically went up to, maybe that's like a 200% increase in social volume related to XLM, and then the next day the social volume dropped quite heavily, and it was around that time that XLM started correcting, and it's a similar pattern that we're seeing in February, right around that next stop. So what is that, like February 13th? Yeah. So it didn't really spike to its most, or it didn't peak at the price top, but it peaked a bit earlier, and then as the crowd kind of went away from Stellar and maybe lost interest in the coin and its pump, the price was no longer able to sustain itself. So what I'm seeing, based on Stellar's previous sort of social volumes, is that we might want to wait a little bit to see, today, once this chart updates and we see what today's social volume related to Stellar is. If it charts a new high, it might not be the absolute top yet, but if it starts falling down abruptly, this might, be kind of the last nail in the coffin for its price. Do you agree?
Sorry, looking for my mic button, unmute button, as always. Yes, absolutely agree.
Yeah, it definitely seems like it. Okay, cool. Yeah, so the fact that, as Kelvin mentioned at the beginning, the fact that a coin is currently number one on our emerging social trends is usually a very worrisome sign, especially when it's, when it appears on that list while it's also in the middle of a massive pump. That usually means that the hype around the coin is pretty much peaking, and we've even done some back tests on this particular phenomenon. We try to run tests on the previous historical times that a coin has appeared in the top three on this list of our emerging trends, what happened with its price over the next week or so. So we did some backtests, and based on 200 instances of coins reaching the top of our emerging trends list, and what happened to them over the next 12 days, there was around, on average, I think 9% drop in the price of the coin that appeared on our emerging trends list over the next 12 days. So there definitely seems to be some data driven evidence behind this sort of phenomenon of the extreme social volumes correlating with the coin's price corrections as well. So keep an eye on it. Cool. Thanks a lot, Kelvin. Okay, I'm going to take over really quickly and share a few thoughts about Ethereum because um, we published a post a few days ago, which seems to have been received sort of. It had mixed reviews on Twitter at the moment that we published it, right, Brian? I think a lot of people were saying that. Oh, this isn't necessarily the case, or I think you guys are reading too much into it, something like that. So basically, let me first of all just quickly give a rundown of what we wrote. So we noticed that there was this massive spike in Ethereum's token age consumed a few days ago, and we can look at it live on the chart here, just so you can see it um, in real time. So basically, what token age consumed does, the spikes in this metric indicate that some coins that have been, a considerable amount of coins that has previously not been moved for a very long time or that have stayed in the same address for an extended amount of time are now starting to move again. And usually when this happens, this can indicate sort of major shifts in the behavior of long-term market holders, ETH holders, and can very often, as a result of that, have a major impact on the coin's short-term price. So we looked at the last 6 months of Ethereum's, token age consumed and what it can tell us about what it did to its price afterwards. And we noticed that very often in the last 6 months, when there was elevated levels of token age consumed, there was basically a local bottom in place. So you can see it here, and then here as well before the spike, here as well before the major rally. Obviously here during the Black Thursday when I think a lot of long-term, ETH holders and basically, pretty much the entire crypto market started fleeing from the market. And then, so based on this and a number of other factors, we said that this might indicate a paradigm shift in the coin's price and maybe another bottom incoming. So, Brian, am I correct to say that a lot of people were kind of hesitant about believing this at the time?
Yeah, there was a bit of a polarized reaction because a lot of people thought that these kind of spikes can indicate a price move in either direction, and it's not necessarily a bottom indicator, which they're correct about. But playing the odds, there's a good chance when we see these types of spikes that it's a foreshadowed move to the upside.
Especially, so I think a lot of times what we see with token age consumed is that it actually acts as a stop point for the current price trend. So you'll see, and I mean they're definitely correct. That, for example, let's look at these two spikes in token age consumed. So this one came at the very end of a downtrend, but the next spike in the Ethereum's token age consumed came at the at the local top. So what this means that is that yes, Ethereum's token age consumed isn't necessarily only a bottom or only a top indicator. It's more than anything a volatility marker or a indicator that a major volatility may be coming to coin's short-term price action. And so you can basically see what happened in the next few days afterwards. You can see that the Ethereum's token age consumed spike here, and then we hit the local bottom at the very next day, and since then it's been going in the other direction. And in fact, there was another spike in token age consumed right at the very bottom as well, sort of, and another validation that the bottom may be in for the coin. So obviously, this is not the end-all, be-all metric, and it's not like Ethereum's token age consumed has a 100% success rate in predicting the coin's price. But it's, just from a behavioral standpoint, I think it stands to reason that these massive migrations of coins that have not been touched for a very long time might have a major impact on the coin's price action. Long-term holders, they don't really make rash decisions. They either do it after a deep analysis of the market conditions, or they do it maybe because they know that something is going to happen. So when you see these guys start moving their coins, moving their bags, it's very often a good time to just pay attention to the chart over the next couple of days. So it seems like we were right on the money with this particular call. And yeah, we'll see what happens in the next couple of days. At the moment, we're not really seeing any sort of spikes in Ethereum's token age consumed, which might indicate that at least long-term holders for now believe that the price can push upwards a bit more. So, for example, let's look at Bitcoin. and see what's been going on with Bitcoin's tokenage consumed. So there was this small spike in, well, relatively small spike in tokenage consumed right here at before this local top here. So this might indicate that there are some weak hands among long-term Bitcoin holders as it tries to push above 7.5k. I wouldn't really call this a too memorable or too notable of a spike to really make any sort of um, confident market calls based on. But it's, if you see Bitcoin's tokenage consumed spikes in the past, you can see, here obviously at the very bottom, and then here at the first local top after Black Thursday. So again, once again, for Bitcoin as well, this metric has very often been right on point when it comes to predicting paradigm changes and behavioral shifts among long-term holders. So it's always an interesting metric to keep an eye on. Okay, so I think we only have time for one more sort of topic, and I wanted to talk about stablecoins because I wrote this article yesterday. Let me just show you real quick. So I was looking into stablecoins even before Bitcoin started really pumping. But especially given this move of about 10.7%, I think, over the last 72 hours, I was interested in what's been going on with stablecoins and stablecoin holders. Over the next couple of days and the past couple of weeks, and maybe were there any indications that we're seeing a change in trends? Because a few weeks ago, I wrote an article saying it was titled, "Is everyone flooding into stablecoins?" And this is, for example, one of the charts that I showed. Currently, what you're looking at here is the combined balance of the top 100 non-exchange addresses holding Tether. So basically, the biggest Tether whales. And what you see is that since Black Thursday, which was here, they have pretty much been accumulating stablecoin, in this case Tether, at a very high clip. So what this indicates is that, and I think we've seen the same sort of pattern on most stablecoins, is that people are sort of very undetermined about where the market will go, and there it seems to be a capital flight type of thing where people are moving away into low volatility assets until the market has shown signs of a recovery. So it's been a while, and I mentioned in that article that we should we should start to see whales and retail holders start offloading their stablecoin bags. So this chart kind of started going down, and especially if there's a corresponding spike in the inflow of stablecoins to exchanges alongside this move, this might indicate that people that have been flooding into stablecoins are returning back to the market, and might indicate sort of a growing confidence that the market is going to recover. So there has been this sort of a paradigm shift happening among stablecoin holders over the last couple of days, exactly as Bitcoin started pumping. So let's just go over a few examples here. So this was the USDT's updated chart of its biggest non-exchange holders. And as you can see here, you don't really see too much of a behavioral shift. They are actually still accumulating at quite a rapid clip. I think there's been around 800 million Tether added to these biggest addresses since Black Thursday here. However, we have seen few small early signs that even Tether whales are starting to kind of change their minds. So here we're looking at addresses that are holding between 10,000 and 100,000 Tether, and we can see that even though they pretty much only accumulated since the market drop here, they started kind of plateauing their balances at the, what is this, April 16th mark, and it's actually been going downwards slightly. I think it's gone down by about 1.3 million Tether over the past 6 days. And then the same sort of pattern has been appearing on the bigger Tether whales, among bigger Tether whales. So these are addresses holding between 1 and 10 million Tether, which have also stopped accumulating here and then have gone into sort of consolidation mode themselves. Now, this is only like a very early indicator that something might be going on. But we're also seeing, alongside this sort of change in the behavior, we have seen a spike in the exchange inflow of Tether, the biggest spike since the market drop, basically. and the 1 month high in the amount of deposits of Tether to exchanges. And as you can see, this is the amount of deposits of Tether plotted against the price of Bitcoin. And you can see that it happened right before Bitcoin started booming. Same here, same thing here. So this is a lot of Tether being moved to exchanges right at the Bitcoin's latest bottom, and then you can see what happened to Bitcoin right afterwards. So this was like, these were the first signs that something might be, changing as far as, stablecoin holders are concerned. And there have been even more prominent and more aggressive patterns with smaller stablecoins. So this is USDC, and here we're seeing the amount of USDC in the biggest non-exchange addresses. So basically, the collective balance of biggest USDC whales versus the price of Bitcoin. So you can see that they've been offloading their money right around offloading their stable coins right around the time that Bitcoin started bottoming out. And since then, Bitcoin has went on a pretty substantial rally. And so here, once again, we're seeing the combined balances of USDC holders holding between 1 and 10 million USDC, so very wealthy stablecoin owners, which have started offloading their bags over the last couple of days. We're seeing the same behavior among people or addresses holding between 100,000 and 1 million USDC, also offloading their coins over the last couple of days. And then finally, you see this massive spike in exchange inflow of USDC in particular, right as as Bitcoin started pumping. So once again, a sign that a lot of people are all of a sudden moving their stable coins to exchanges. For what reason? I think all things point to a buying frenzy, so to speak. And there was also a huge spike in USDC token H consumed at the same time, meaning that some long-term stablecoin holders, people that have not really touched their stablecoins for quite a while, have started moving their coins at the same time. And if you correlate it with the spike in the exchange inflow of USDC, you can kind of figure out that a lot of this might be long-term stablecoin holders starting to move their coins to exchanges, and probably in order to buy Bitcoin and or altcoins. I think mainly Bitcoin as far as USDC is concerned. I think USDC's biggest trading pairs are all tied to BTC. And then we're seeing the same pattern once again with True USD. Whales starting to offload their coins. Those holding between 100,000 and 1 million Tether USDT starting to offload their coins, and at the same time, a huge inflow of TUSD to exchanges. And finally, BUSD, although a smaller stable coin, it's been gaining ground among even some institutional holders. Same thing. The biggest whales have started kind of offloading their BUSD. People holding between 100,000 and 1 million BUSD have done the same. The same thing with people holding between 1 million and 10 million BUSD. So all of these wealthy stablecoin holders seem to be once again coming back to the market, which is kind of emphasized by another spike in the exchange inflow of BUSD. So all of the biggest stablecoins have shown the same pattern over the last couple of days as Bitcoin started rising. That pattern is big stablecoin holders are now moving their bags or moving their coins to other addresses. And it's very likely that a lot of them have been moving those coins to exchanges because pretty much every stable coin has had a correlating spike in the exchange inflow. So that's why I ended this article by saying it seems like our prediction has once again come true. So what we said last time when we were talking about this exodus of stablecoin owners away from the market, we said that if we see whales start offloading their bags, and especially if we see a corresponding spike in the inflow of stablecoins to exchanges, this might be a sign of a market-wide recovery. And this is what we're seeing on the charts over the last couple of days. It's not really 100% case that this is going to go on for a while, but these are the first early signs that I think a lot of especially wealthy stablecoin owners are starting to come back to the market and warm up to the fact or the idea that Bitcoin might be able to chart a higher high. And I think this is probably, in my opinion, one of the biggest reasons why Bitcoin has been able to chart this 3-day pump as effectively as it did. So yeah, I don't know. What do you guys think about this? Do you think I think the correlations are pretty startling. I think you can't really deny that there is something there, right?
Well, we've seen the market cap of stable coins increasing just
with staggering numbers in the recent weeks. I mean, this is definitely something.
Let me show you.
It's quite an important event, in my opinion.
Yeah, let me show you the market cap for Tether over the last, let's say, 3 months. And let's compare it to the price of Bitcoin. So it's, well, actually, let's do last month so you can maybe see it a bit clearer. So yeah, look at this. So even though the market cap of Tether has been kind of, pretty much at this level of 6.4 billion for about a month now, as Bitcoin started booming, there has been a drop in Tether's market cap as well. It has since rebounded a bit, but yeah, we're also seeing, the market cap of some of the biggest stable coins now starting to decline a bit. So this also might be, a positive sign for the market, don't you think, Valentin?
Well, if you look, it actually the market cap increased like with 700 million since a month ago.
Yeah.
I mean, it used to be 4.5 billion. Now it's almost 6.5.
Yeah, almost. It's 6.4 at the moment.
Yeah, 6.4. So yeah, it's crazy. Like I'm wondering where this money are coming from. Is it like this actually should be new money coming into the ecosystem, because the way Tether is being created is that you need to deposit fiat funds to Bitfinex in order for Bitfinex to issue a new Tether. If you sell your Bitcoin for Tether, the market cap of Tether is not going to increase. It's going to increase only if new fiat is being deposited. So if there is new fiat money flowing into the crypto space. So since this market crash, we've seen like hundreds of millions of dollars being flown into crypto. Maybe people are looking for just better investment opportunities,
Yeah, it's possible. I mean, obviously Tether has been the biggest sort of gainer in terms of market cap, but you can see the same thing for other big stable coins. So this is USDC, right? Pretty much the same thing. So where's the market collapse? Let's see. Let's say look last 3 months. So this was the Black Thursday, and then this is what happened with the market cap of USDC since. And I think other big stable coins are.
we see like 50% increase
It's
of the
crazy.
market cap of the stable coins. Yeah, I think only True USD
Yeah.
decreased a bit. Like, I'm not sure why is that. Maybe I think right now the biggest stable coins are pretty much Tether and USDC, and I guess Binance also is picking up speed. And I think that's normal because these stable coins, they're also connected with fiat on-ramp gateways, which are the exchanges. So it's very easy to obtain these coins. Actually, I'm not sure what's the case with the True USD, like how the fiat on-ramp works there. But yeah, Bitfinex and Coinbase and Binance are the biggest exchanges out there. So I guess it's normal that their stable coins are going to be the most widely used.
Yeah, true. Yeah, I don't know about TUSD and kind of why it started. Actually, it bucked the trend of pretty much all other stable coins. I think also DAI. Well, DAI is a very specific, but yeah, the market cap has also kind of not really risen all that much, unless until the sort of April 15 mark when it started actually growing once again.
Actually, the amount of DAI being in circulation is quite correlated with the price of Ethereum. So because of the huge crash in the Ethereum price, a lot of DAI had to be repaid back because the CDPs that are creating this DAI had to be collateralized, and new Ethereum had to be brought in there, or their loan had to be repaid. So it's normal that when we see such kind of
large drops into Ethereum price, we're also going to see a lot of DAI being wiped out of the market. And as the price increases of Ethereum, we're going to see more and more DAI being printed.
Yeah.
And actually, DAI was in a huge liquidity crisis after the Black Thursday.
Yeah, I think there was like a 4 million debt bubble or something that happened.
Yeah, and there's been an enormous amount of DAI kept in DSR that couldn't be used to repay the loans. It's almost like everyone had to get back their loans, and there was not enough money on the market in order to pay back your loan. And you can only pay back your DAI using DAI. Like you can't pay it back with USDC or like you can pay it back with Ethereum, but still like there was a huge liquidity crisis, and that's why DAI is still exchanged for more than $1. Right now, I think it's $1 and 1.5 cents something. No, yeah, something like that. So it's 1.5% above the $1. It actually reached like 7% above the $1. So yeah, I mean that is a bit different.
Yeah.
But yeah, Tether USD and Binance doors, they went through the roof. So yeah, very interesting.
So I think on that note, guys, we're going to call it a day here. You can check out all of the insights that we mentioned, including the stablecoin insight, the one about Ethereum's token age consumed. Kelvin's currently writing an insight about XLM or Stellar, which is going to be up today as well. You can check out all of them on insights.santiment.net. And pretty much all of the metrics and indicators and tools that we have showed here today are available on app.santiment.net. And on data.santiment.net. I suggest starting by going to app.santiment.net, our flagship product, where you can basically get access to most of our advanced crypto metrics, indicators, strategies, and signals, and start from there. So, as I mentioned already, if you liked what you heard today, please check out santiment.net. The link will be in the description of this video. If you want to be a more active participant in this sort of discussions, there's a link to our Discord channel in the description of this video as well. We talk about these sort of topics pretty much every day on our trading channels. So if you don't want to wait until next Friday to kind of, see what we think about the market or to ask us about certain coins and certain on-chain events, social events, just jump over to our Discord and we'll be happy to chat. So I want to thank everyone that have kind of presented their opinions about the market today. Brian, Kelvin, Val, thanks all, and everyone here joining us and listening to this live or after the fact. And I'll talk to you all in 7 days. So thank you all.
Thank you.
Good stuff, Dino. Thanks for leading the call, and thanks for tuning in, everyone.
Correct. Thank you, guys. See ya.